Hello and welcome to another edition of Stockwatch. So as we get into the trading week, we're still hearing earnings reports after earnings reports. Now it's the turn of the UK's biggest banks in HSBC and Lloyd's, as they are currently, surpassing expectations once again on the recovery. A little bit like yesterday with ExxonMobil and Chevron when they surpassed expectations on the, expected recovery for 2021, and it's no let up for the UK banks as well. So HSBC naturally beat first half expectations on the earnings per share and revenue that they were expected to hit, and dividend payouts was also very, very buoyant as well. And as I said, since the global economy bounces back from the pandemic, hopefully anyway. So let's look at the figures then. HSBC, the banks reported pre-tax profit more than over $10 billion. And this is just from under 10 billion from analyst estimates. HSBC shares in Hong Kong did jump over 3% on the news as well. And the bank said it targets a dividend payout ratio of 40 to 55% for the rest of 2021. So very, very buoyant news there. And the same with Lloyd's Bank as well. Pre-tax profits for the last 6 months from January to June came in at £3.9 billion. And following losses of over £600 million in the same period last year when the pandemic really hit, and a lot of banks and branches were closing as well. They haven't really let up on branch closures at the moment. They still said that they're going to close another 44 branches in the UK, and this will total over 100 branches. So those are disappearing for the high street, and this is just due to online internet demand. A lot of things can be done a lot easier on the internet now, especially for banking purposes. So this is why a lot of branches and shops, you could say, are closing. So let's just take a look on HSBC first of all today. So at the moment I was just concentrating on this downward spiral that we've been seeing for the last few trading sessions to see if there's going to be some kind of way out. I'll just zoom in so it's a little bit easy to see. At the moment, there is no way out for the prices. We are trading very far down from the Ichimoku cloud. We are looking to see, I'll just extend this a little bit longer just so it makes a little bit more sense. So roughly about there. So, we're looking to propel over the 400 mark at the moment. That's a very psychological line. But, the chances are we might not get that far in the near term at least. I'll be looking at the recent peaks like I usually do with the assistance of the Ichimoku indicator. But at the moment, it is looking rather grim for HSBC in terms of share price at least. Let's take it down to a 4-hour chart just to get a little bit more of a momentum here. Again, nothing too much in the way of divergences on the RSI. It's pretty flat at the moment, so I'll just be looking to see if we're going to pierce again this Ichimoku cloud bottom border, and then we can see if we're going to start moving to another level above or out of this top line of the descending channel at least. So a little bit of a worrying time for HSBC. Well, depending if you're a bull or a bear, that is, if you're looking at hawkish or dovish comments from the banks in general. As I said, at the moment, a lot of worrying times around the British banks because there are a lot of branch closures on the high street as well. So with Lloyd's Bank, though, we are looking at perhaps another go at this particular peak that we saw recently above the 50 mark. So that's quite buoyant, hopeful as well for bulls in particular. We have pierced this Ichimoku cloud. We are in the engulfment stage now, so we could see another leg higher if prices do get out of the cloud as well. So that would be quite significant as well. And just looking at an intraday perspective as well, there was quite a downward descending channel, but as you can see, we are now in this structure here, roughly about the 45 to 50 region. Again, nothing too much in the way of divergences. You could say there was a slight one here, but this would be bearish anyway to bring prices lower. So again, we'll see if that turns into a solid divergence that could start sending prices a little bit more lower. But at the moment, I'll just be looking to see if prices are going to break out of this confluence area here, and then we can start pushing to these recent highs that we've seen recently. So thank you very much for joining me once again. That's all from the Stock Watch video. If you have any comments or queries, as usual, please add them to the post, and I'll get back to you as soon as possible. Have a great trading day ahead, and bye for now.